What's going on, guys? Welcome into Energy Newsbeat here on this gorgeous Monday, January 11th, 2021. As always, I am your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado. Joined as always by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsbeat.com, Stuart Turley. How's your weekend, my man?
It's a beautiful day in the neighborhood, and it was packed with a lot of fun things.
Yeah, no, this weekend was great. A lot of football this weekend. If you follow Energy Newsbeat on Twitter, we made you a little money. We had Baltimore and the points. I'd highly recommend following us on Twitter. Subscribe to this YouTube channel at Energy Newsbeat. Hit that pesky notifications button to never miss an episode. And also just check us out on the world's greatest website, EnergyNewsbeat.com. We have a packed show, as you can see, via our rundown. And we'll go ahead and just dive in right now. We'll take a quick look at the equities markets. Top line numbers, SPY was down 0.75 percentage point. Nasdaq's down 1.2 percentage points. Dow Jones down about 0.5 percentage point. And there's a mixed bag here. So here's the sentiment. What's hilarious is that you go to CNBC, the headline is stocks fell on Monday as investors assessed equity evaluations on the outlook for more COVID-19 stimulus. It's almost like today people realize, holy smokes, Tesla's trading at 90 times 2021 cash flow. Maybe we should slow down on the evaluations here. It's absolutely unbelievable. I mentioned Tesla because their shares were off 5.8 percentage points. Bitcoin, we're talking a little Bitcoin here. They were all the way up to $43,000, currently trading. What's the current Bitcoin price for us? It goes over $31,000. It's now down 19 percentage points on the day. The reason why I bring that up is those are Tesla. Those are more speculative on the fringes of where their valuations were. They're the ones starting to pull back. That's where this headline's coming. It just cracks me up because there have been people screaming that the equity valuations are too high. And so what this means is, and so here's the quote: at extraordinary high valuations is where we are, and it's being supported by massive amounts of stimulus. That's the key from billionaire investor, DoubleLine Capital founder Jeffrey Gundlach. Stimulus. That's where these valuations, with all this money coming in, it's really, really helping these larger companies. It's all flowing back into the markets, not none of it, not, trickle down economics, not quite working in this situation. From my vantage point, to give you guys an idea, shares of Tesla were up 25% last week or 800% in the past 12 months. It's just unbelievable, guys. So to finally hear they're assessing equity valuations, where were you a year ago? Where were you 6 months ago? It just kills me, Stu. Moving over to oil and gas side before I have a hernia, they actually stayed flat, down 0.25 percentage point. Crude oil currently trading about 52.12, settling at 52.11 right actually as we're recording this at 12:30 Mountain Time. Back end of the curve, actually up 0.25 percentage point to 50.30, so that contango closing a little bit. What's funny is we'll talk about Goldman Sachs and some of the stuff that's going on the E&P side. Not much in terms of OPEC news that really moved crude oil markets. Obviously, as we tick closer to their next meeting, we could see more supply come back on, so it'll be very interesting to see. Natural gas was up 2 percentage points, $2.75. That's good to see. It looks like there's some colder weather sleeping through. I've got sweats on. That's really nice today, but we had a nice cold front over the Midwest. As you look at some of the natural gas reporting, it really, really, really looks like it's a weather-driven event. XOP, which is our E&P securities contract, 66.39. That's 1.3 percentage points on the upside. OIH doesn't do as well on the downside. 0.4 percentage point, 174.86. Just look at individual securities now on the downside. Permanent Royalty Trust down 3 percentage points. Northern European Royalty Trust. A lot of our ETFs down today. All ETFs down big today. Battalion Oil Corporation down 3 percentage points. Callan down 3 percentage points. On the upside, though, some big numbers. SM Energy, they're up 8 percentage points. Kentura Energy up 8.5. Sandridge, they're up 9.6. Tensico Gas up 11. And Terra Resources, they're up 11 percentage points, which we'll cover that in a story here. And Grand Terra Resources up about 20 percentage points. All right, Stu, you have a packed show on the international news. As I'm buckled up, hit us with this first. What do we have?
I'll tell you what, this weekend was nutty. I was working on stories all weekend. First one is our buddies over in Iran and South Korea. Take a look at this one. They had seized the tanker from South Korea, and I got really tickled at this one. If you can get tickled by a terrorist snagging a a tanker. The Iran folks said that tanker was polluting, so they seized it. It's actually because they owe South Korea owes them $7 billion. Do not owe Iran $7 billion, or they are going to turn into the climate police on you. Okay. Oh, what's a few billion between friends? Oh my goodness.
Well, this is just an entire yikes. I mean, the political workings that are probably happening behind the scenes, unbelievable.
Can you imagine somebody going in for a meeting and saying, we'd like to have our crew and our ship back, but oh, by the way, he did say in there, the quote, the emissary said, prove to us that our ship was polluting. I was like, okay, taking a look at our next one. It is Libya. You and I had been on ball on this Libya stuff last year. I called it when nobody else did. We even got the reporters from Libya calling in saying, hey, you guys are right. Okay, this one is a prime example of why OPEC cannot control their people. It says Libyan surge, slipping compliance push OPEC plus up sharply in December. This is from the Platts survey. Unbelievable. OPEC plus at a 7-month high, compliance down 98%. Saudi Arabia at 9.01 million barrels per day. Russia is at 9.10 million. Saudi Arabia is at 9.01. I think Russia just wants to beat Saudi Arabia.
Yeah, they just want to be the top producers. That's interesting. But of course they're cheating. Shocker there.
And the report from Platts actually has some very, very good numbers on amount that each one pumps out. And the coalition for OPEC Plus is March 4th. You and I are just going to be, we're going to try and see if they ask us to host that one as well, too.
Yeah,
okay.
I'll be furiously waiting that invite in my inbox. Michael at sandstonecg.com.
Okay, here's the next one. I don't know if I should save this one to last or not, but Michael, you've been beating me up on natural gas and the pricing. I'm sorry, you're unmercifully beating me up. Check this one out. We got India. India evidently was listening to the show because they're buying reserves. They've got several salt mines and depleted aquifers that they're filling up, and they're buying everything they can in natural gas so that they don't have to be reliant on China holding them up.
I've heard Prime Minister Modi's a big fan of the show, so I'd expect nothing less.
Oh, absolutely. Okay, here's another one. You ready?
I'm ready.
Okay, here we are. Apple. They're coming out with a competition for our boys over at Tesla. This is actually a funny one. And Hyundai, their stocks were up 20% when.
So what's the headline? Apple and Hyundai teaming up?
Yes, Apple and Hyundai agree to an electric car tie-up early this year. Okay, here's the funny part. They're either going to build them in a Georgia plant from Hyundai, or they're going to build a whole new plant. Okay, yes, some of that will be good American jobs. Yay. But Apple is a high-priced image. They always charge a premium, and they're going to build it out of the Hyundai Kia product line. Those are not the high-end kind of things. So I'm kind of curious on that.
Next thing your Hyundai Sonata is going to be asking you, it's going to be asking for your Face ID before you can get in. No, I mean, it's only a matter of time before these start getting outsourced overseas. But it'll be interesting if they can actually get this plant in Georgia. I'm about it. Right now there is no real main competitor to Tesla, but the problem is Elon Musk is attacking two different verticals. He's attacking I'm now going to solve the problem in his eyes of electric vehicles and creating batteries that can work. But then he's also creating a self-driving vehicle, which is a whole nother avenue we can do. So it'll be very interesting to see what Apple and Hyundai decide to do. Is there just an EV car, or is there a component that's self-driving? That's what I'm looking for in the deal.
I'll tell you what, I have all the respect in the world for Elon, and that's the first time I've gotten his name right since we've been on the show. I usually call him Elton, but hey, got another one here. Total, they just bought. It is called Total acquires France Biogas and becomes the French leader in renewable gas. Pretty darn cool. This is an example of the majors going off and jumping into renewable and trying to get their market share. If you can see from our wonderful graphics team, it's all over France. And so they are producing. Are you ready for this? Okay. Instead of gigawatts, okay, hold on to your pants. Okay, it is, we intend to produce 1.5 terawatts. Okay, so we have gigawatts. Now we got 1.5 terawatts. So what's a terawatt divided by a gigawatt?
What's a couple gigawatts between France? No, Total is really taking a stand
That's right.
and pushing this renewables forward. It's fascinating to watch.
I'm out of breath, dude.
Are we done? I've got enough frequent flyer miles over the past week to get this. But no, all great stuff. I mean, it's just unbelievable what's happening in the international game. And Stuart Durley is the man all about it. If you have any international stories, reach out to him, Stuart at sandstonecg.com. Turning to the U.S. energy side, we've got really three stories I want to cover. First, Goldman Sachs sees crude oil prices increasing 60 for WTI, 65 for Brent by mid-summer 2021. They upgraded their current inventory,
No way.
which was supposed to be
No way.
what?
Come on. No way. No way.
We know where Stu stands. So they were originally forecasting $65 Brent, $60 WTI sometime late winter of 2021. They've now upgraded that to the summer. So it'll be very interesting that, they cite last week's pledge to cut output. I mean, that's only for 30 days. We know that there probably is going to be an increase at some point. Rigs increasing a little bit. Now, I have heard the argument rigs are increasing, so we're going to see more production. I've actually heard we need about 400 rigs to maintain current production from declines. We're only sitting at about 340. What was I forget what we ran rigs last week. Were 9. It was like 340, right? So I mean So we still have a lot more to add before we continue to add production. So. Do I think we could see that number? We might. It'll be very interesting. I think, is it a little bullish? Probably, but hey, these guys get paid money to do this. I don't know if that means anything, but they technically get paid to do this. So, speaking of people getting paid to give predictions, Morgan Stanley, after all the fuss for ESG investing, increases ExxonMobil to an overweight. This just kills me, Stu. All we've been hearing about people, we got to get oil and gas out of our portfolios. Morgan Stanley, which is a huge institutional investor client base, increases Morgan Stanley from an equal weight to an overweight. They've presently priced it at $57 even, up from their previous price of $49. That they see a potential upside of 25.3% from the stock's current price. I'm all for this. It's actually fascinating to see these large research firms increasing oil and gas, because all we've heard is underweight. It's just there's so much we could say about this. We hear all the time we are getting rid of investing in oil and gas due to climate change, and then what happens? Boom.
It's amazing what a little bit of recovery happens, Michael, and then everybody is jumping on, say, oil and gas investing is good. Give it a week.
Exactly. I mean, it is really, it's like, what's the weather in Colorado? I don't know. You just have to go outside and look, because it changes so quickly. You just got to, what's the current state? Well, it looks like it's good, so let's mark it as an overweight. I mean, I guess you call it like you see it. It's just fascinating when I get lectured about ESG investing. So, but that's a story for another time. The final offering that we've got for you guys, as I mentioned, Intero Resources, our second biggest mover on the day. They're up 11.2 percentage points. Big reason why they announced the launch of a $500 million offering of senior notes due in 2025. 2029, and they also said they intend to use portions of, I can't read today, in the net proceeds from the offerings to fund the redemption of all $310.5 million aggregate principal amount of its 5.125 percentage point senior notes due in 2022, raising debt to pay off debt. Got to love it, Stu. And obviously the market loves it now. So you know what this means? This means the market thinks that this is going to be free money for them because of the fact that all the stimulus is going to give. That's all it means. All it means that the market thinks this is free cash. And someone's got five. It just cracks me up. So, there's more free money to go around.
I don't know.
Was Morgan Stanley the securities advisor on here? Let's find out.
I used to think I knew what drove the markets. Nothing is the same anymore. You sit back and look at the economic basics; they're all out the window.
I'm trying to see who actually does the. I can't tell who's the one that actually is sponsoring this. It'll crack me up if it's Morgan Stanley. It's probably not, but it's probably not. But
the fundamentals are no longer fundamental.
No, and that's why it's also just the headline today. This is what you go on CNBC, their first article, their first line about how the market performed today. Stocks fell Monday as investors assessed equity valuations. Trust me, I laughed just as hard as you did when I first read that. Unbelievable. It's like, welcome to the party.
Yep.
Anything else, Stu?
I'll tell you what. Fundamentals used to be fundamentals. And I just want to ask sometime, can anybody tell me when hyperinflation starts? We're going to see that, I think, around the world.
So the problem is, and not the problem is, but hyperinflation starts. It's a good question.
Whoa, I've stumped Michael. Get out of town.
No. It's not that you've stumped me. I don't think we're entering a period of hyperinflation quite yet. I think the bigger issue is, it's just so funny. All I heard from 2008 to 2016 was how bad the debt is. 2016 comes around. I haven't heard anybody mention the debt. And if, we go, let's just look at this. National debt calculator. This is going to be disgusting, Stu. What do you think the national debt is?
47 trillion.
47 trillion. That's a little absurd. $27.7 trillion. That's $222,000 per taxpayer.
Now think about it. If you have a $3.1 trillion benefit coming out that's several $100,000 per person, whatever that number is, you're about to see about 16 more of those. So that's where I came up with that 47.
You want to hear something funny? U.S. federal tax revenue, $3.4 trillion. U.S. federal spending, $6.6 trillion. Woof. That's a double woof.
Fundamentals are not in play anymore.
No, but the real key is the debt. I don't think we are in a situation where we have to worry about having hyperinflation like what they're seeing with what we've seen in currencies all around the world. I don't think we're in that capability. What I do think is that at some point, it's not that it's going to be hard. Because we have to borrow this money from somewhere. We have to find somebody to buy our bonds, and it's either China or the Federal Reserve. The Federal Reserve can continue to print money as long as we have this notion that the dollar is still the safest place. The moment the world decides the dollar is not the best place to store all of its investment, yes, then we are in trouble. We will have hyperinflation. But for the foreseeable future, the dollar is. You go overseas, everyone wants greenbacks, baby. Everybody wants greenbacks. Or it's called the petrodollar for a reason. So I'm worried about that $27 trillion number, not necessarily hyperinflation. I'll take the $2,000 check, Stu. I'm eligible for it. I'm poor. So I'll take my $2,000 check. But I do understand I'm going to be the one paying for it in the future. So, yeah.
Yeah. We'll go into my theories on hyperinflation in the international dollar here later on. But we're going to have fun, Michael.
Yeah, no. And with that, guys, we're going to go and let you get out of here. Get back to work. Just follow us at the world's greatest website, www.energynewsbeat.com. For Stuart Turley, I'm Michael Tanner. We will see you tomorrow. We hope you are tuning in to the national championship game tonight. We have Alabama and the points. So go make some free money.
All right.